to the entire creation, then we are yet, or we will yet be able to solve the problems. So clearly for me is the way to go. Of course, we are aware that the introduction of the e-naira was principally, part of the ways to possibly reduce the speed at which cryptocurrency was being accepted, traded, and worked with within the emerging markets. However, it is very, very instructive to note that even in the development of the CBDCs, 95% or more of the countries have been experimenting ever since they started. There are only very few countries, just on the count of the hand, that have even tried something, which means there's so much to be learned. There's so much to be learned. The SEC had been part of, this strides and development, and indeed, the FinTech Nigeria group had been part of the SEC's work to a large extent from the point of the capital market roadmap to this point. Most recently, just last week, and we amended the rules for VAPs, which speaks to the requirements for the registration of, the DAOPs, the DACs, and the wallets and all the exchanges itself, in order that we all have some clarity as to what the SEC intends to achieve in the registration of such capital market operators. And that is under the fact that registration is actually the hallmark for regulation. So if you do not register, regulation becomes difficult. Even when you desire to get information. Because if you do not register, what will happen is that you will be creating a pool of black markets that will be injurious to your own economy and to the stability of your system. And that is why regulation is important. As much as it is acclaimed that cryptocurrencies are freedom money, so they are centralized, decentralized, and so they should have their life. These are very, very important issues that needs to be taken into consideration at any point in time. So the developed in regulation is intended to balance innovation with consumer protection and regulatory oversight in this space. Having said that, what is a digital asset? Basically, three primary characteristics are stored and transmitted electronically, that is digital, has ownership or use rights, has value, and they include things like cryptocurrencies, non-fungible tokens, central bank digital currencies, digital photos, websites, electronic files, logos, and just name them. Of course, digital photos have been there since, websites have been there since, electronic files have been there since, and the logos have been there since. The new ones that we know and we're grappling to understand are cryptocurrencies, non-fungible tokens, and central bank digital currencies. But we hope that we'll get there. The ecosystem is clear and it is depicted in the table I have on screen. where you have, crypto assets, central bank digital currencies that are broadly termed cryptocurrencies. However, the question is a currency that is issued by the sovereign or that is issued by the people? So, give or take, the debate is, should we actually be calling it crypto assets or cryptocurrencies, or we should be calling them something else? But that is, a discussion of the future when we continue to generate what we call the taxonomy in the space. Layer 1 coins, of course, the layer 2, the fungible tokens, the smart contracts. Under layer 2, you have the stable coins, which are beginning to gain ground, governance tokens, utility tokens, non-fungible, tokens, and the development of orders as we see every day. We all know about this, so I'll just jump it. Bitcoin, the story has been told time and time again. And of course, we know that the reason for the current growth in the pricing of Bitcoin is as a result of the year of the halving. This is the year of the halving, and each year of the halving, there is this, optimum push in the prices of Bitcoin. And it does affect other currencies, so the move happens. But in economics, we know once you have such move that destabilizes the economy, the tendency is for a correction, which also brings about some level of disruption. And that disruption will probably bring about a depression, which will now be corrected again to have some level of stability, and we now move on. And that is the critical reason why we cannot be on the fence in these developments. We must, as a matter of urgency and fact, take it so seriously in order that financial system stability is achieved and disruption that will bring about misery and poverty is not encouraged. So the depth of our interest must improve in order for us to have an understanding of how to manage the risk. Basic macroeconomic indices such as inflation, interest rate, exchange rate, money supply will certainly be affected. And if you cannot lay our hands on what affects inflation and exchange rate volatility, then we certainly cannot hold to the principles of financial system stability. So these are issues that are critical and useful for us to be able to attain the kind of stability we desire. This simply speaks to blockchain and, the little terms. I know my time is for 15 minutes, and I can see that I've run beyond that, but I just maybe take 2 or 3 more slides and maybe, So this is also just to know fungible tokens. What more to know? The slides certainly we made available. You have the crypto wallet, the native coins, and the crypto tokens. Then you have stable coin and central bank digital currencies. So this essential knowledge, what's the digital asset? What's a crypto asset? What are the characteristics of a crypto asset? A deep dive into all of that. So the emergence of digital issuance assets has brought about disruptions in the global financial markets and traditional financial services to the extent that various jurisdictions have recognized digital assets as a key component of the future growth of the changing financial landscape. The question I will ask, do we also fall in those various jurisdictions? Do we accept it? Have we incorporated it into our financial architecture? Have we mainstreamed it in our economic advice and responsibility. If we have not, then we must start engaging deeply, rather than waiving some issues and thinking that they are not important and that we are not there yet. I can tell you, we are there beyond our thoughts. So, in the various engagements that have happened, we hope that this will happen. This is data showing the various digital assets, by countries as case is, and just go over that and move into something that I think I should mention before I close. General risk of investing. This has become a major investment tool where everybody is going into. The young, the old, and the not too old. But what do they know about investing? What do they know about even putting their money in this? Do they understand that there is indeed a risk of losing their entire money? Oftentimes, when you gain so much, you are happy and you are smiling to the bank or smiling to your shop to buy a new car. Or when the negative aspect of it happens, you don't have anyone to comfort you. But immediately, you know from the beginning, then you can have a balance in your, in your reactions and your emotions as the case is. So why invest? To try to earn a greater return on your money than you could be keeping it in a savings account. Because what is the biggest risk? You could lose some or all of your money. The greater the potential return, the greater the risk. These are information that needs to be told. And once we understand all of these, our attitudes may be different. Is it investing or is it gambling? There is a debate about it. And whichever way you decide to take in the debate, you'll probably be a winner. The investment spectrum speaks to all of this in terms of risk-reward relationship. And when we understand this, we are probably more comfortable knowing where to place ourselves, knowing where to advise people that we are advised, knowing where to give people, because one important thing about all of this is that for those people that are within policy-making framework, if we do not have enough information, we cannot provide enough policy advice. It is only when we have enough information that we have enough policy advice. The moment we stop second-guessing or wishing away what is happening in this space, that is the only time we begin to give directional advice to governments in order that we are able to do one or two things: accommodate everyone that's involved, and also make sure that for those that are involved, they are not beaten when the chips are down to this point where they will be so depressed. Because whether we like it or not, if somebody wins, the person is a citizen. If the person loses, the person remains a citizen. And the mental state of these people is the responsibility of government. And so, what do we need to do to manage that mental state is to be able to provide adequate information that will guide them in making sure that mental state is not disrupted. On this note, I want to stop, and because I guess, my time is up, and unless I'm asked to continue.
Thank
Dr.
you. Thank you.
Obrima?
Yes, sir.
Yeah.
Thank you so much, sir. I can say that the president is on the call, Mr. Bajemo. I don't know. Would you like to take over, sir? Okay. All right. We'll keep our questions. I know that people have a lot of questions to ask with respect to this. Dr. Jacob, can I?
Hello, Dr. Brima. Can you hear me?
Yeah, I can hear you. Yes.
Okay, okay. Thank you. Thank you. Okay, it looks like Mr. Mohammed is speaking, but his microphone is muted. I can see him on video. So are you trying to say something?
No, not at all. I'm just waiting for my time. Or is it my time?
Okay.
Not
Just
yet, sir.
just before then, I just wanted to thank Mr. Agama for the insightful presentation. Dr. Brima, I don't know if we are meant to take questions from the presentation. Maybe one or two questions before we quickly move on to the next item.
Yes, I think we can take one or two questions.
Okay, so the floor is open. Let's take questions.
Okay, so maybe I should. There's a question that people have thrown at me. When this new regulation came up, that in the banking sector, you have different licenses for the small players like the MFBs, the PSBs, and you now have the commercial bank. Even the commercial bank, you have those with regional licenses and national licenses. Why is SEC not considering that? With this regulation, it means that only foreign players might come into the digital asset space. And my rollout might prevent the local players from being able to participate. Is this something that SEC will be looking at? So maybe that will be the question I will pose to Dr. Agam.
Right.
Thank
Thank you,
you.
Dr. Brima. I'm not speaking for the SEC. That's my first disclaimer. But as a member of the SEC family, regulation is not something that falls from the sky. Regulation often is a development. And we understand that at every point in time, practice has actually always been in front before regulation comes to catch up with it. But even then, we should all understand that the crypto space or the fintech space is different. It's virtual, more or less. There are issues that, their offices are not brick and mortar like the banking system is. It's not. So you cannot now use the same, cover for the banking system and the money market to, the fintech space. No, it won't work. It won't work. And that's why, yes, the idea of regional license, national license, and global licenses, they have their base and they have their reasons. The question I put back, if you have a regional crypto exchange license, how do you stop somebody who is in another region from transacting business in this license that is regional within another region where the license was not obtained? So there are practical impossibilities in some of those suggestions. But an information I would like to share, right, will be that individuals who are in this business must start to think about creating a structure, a formidable structure that is not dependent on an individual. And that is to say, if you think the money has been too big for you, then it becomes necessary for you to think about a collaboration where 2, 3, 4, 5 of you that have such money will come together to put up that institution in order that, one, you have a structure, 2, you have governance, 3, you have risk management, 4, you have responsibility and accountability, and 5, you have transparency. Then you'll be creating an institution. For those that do not remember, that at the end of the day, the central bank came to reducing the number of banks from over 88 to 24 because it was important to do so for regulatory purposes. And so these are some of the dynamics that work within regulatory thought process in sending out some of these regulations. And it becomes easier to manage situations. Let's not look at it from the prism of individuality. Let's look at it from the prism of national good. And that will go a long way at helping the growth of the system and the maturity of the system. I hope that answers the question.
Thank you, sir. Yes, it does. So I think that because of time, we'll take the next presentation.
I agree. Let's proceed. I think that's on the 2024 fintech landscape.
Yes. Yeah. Mr. Nii Toluwalokwe of eTransact, MD eTransact, will be speaking to us on that.
Hello.
Hello. Yes. Yeah, we can hear you.
Yeah, thank you. Thank you so much for this opportunity to speak on the 2024 fintech landscape and emerging white space opportunities. If you don't mind, I would like to share my screen. I have a few pages that will guide the conversation and the flow of discussions. So let me let me confirm that you can view my screen. Can everyone see my screen?
Yes, you can see your screen.
Okay, fantastic. So it's just a few pages. I will try to keep things within 15 minutes because that was the initial brief. Also, just to confirm that I can be heard clearly.
Yes, we can hear you clearly.
All right, fantastic. So that's the title, 2024 Nigerian FinTech Landscape. So we're looking at the past, the present, as we look at the specific trends we see in the future. Yeah, that should be 2024. This is a brief intro of who I am. I've seen a couple of familiar faces, people that know me. Currently the CEO of eTransact, and that's my brief background in banking in New York and my interest with sports. So in laying the foundation, it would be nice to look at and explore the trends over the last couple of years in the Nigerian fintech space, looking at the evolution over the past 30 years with the specific focus on the emergence of 3 eras of fintech growth. In 1993, the Nigerian Interbank Settlement System, I think, was established. And then in 97, the first digital payment solution in Nigeria. I think it was a payment card powered by Value Card then. The store and value a transaction card was created and distributed, and then I think
that 5 minutes. So
and I think
once this
hello. Sorry, are you speaking to me, Mr. Obrima? Are you saying something?
No. Go ahead, please.
Oh, okay. All right. So, and you know, this is, I think this morphed into the core of unified payments as we know, UP as we know it today. And then yours truly, eTransact was incorporated in 2003, and FinTech 1.0 begins with the first, you know, set of fintechs actually doing real fintech stuff at that time. And then over the next couple of years, you know, the CBN, you know, started to provide regulatory guidance, operational guidance on, you know, the various emerging opportunities in, you know, in that space at that time. Particularly, you know, with the rollout of mobile money, mobile payments, and then fintechs like us, eTransact, leveraged this to launch mobile banking on the back of, you know, the GSM licenses that, you know, were introduced, you know, in this year brackets. I think earlier in the 2002, 2003 period, creating the possibility to drive financial transactions on the device, you know, you carry with you at that, you know, at that point in time, which further led to, you know, to the emergence of mobile money platforms like Pocket Money and Paga and PagaTex Paga. And then, you know, transactions started to grow, more organization within the sector. And then I think in 2015, thereabout, I think it was announced that approximately 30 to 40 trillion in transaction value, you know, had been processed. And at this point in time, a lot of private equity, venture capital, hedge funds started to notice the growth and expansion opportunities, capital expansion opportunities within that space. And that gave birth to what we like to call FinTech 2.0, you know, with the startups like Paystack, you know, the very brilliant solution that was deployed into the market space, you know, at that time. And then a couple of years after that, with all the innovation, all the drive for digitization, all the drive for, you know, electronic payments, it was announced that over 600 trillion in transaction value, you know, had been processed and recognized. And then that year also, even though that was the COVID year, which experienced a lot of slowdown in wholesale type transaction processing, but significant growth in, you know, retail direct to consumer type transaction processing, you know, I guess because of the, you know, stay at home, social distancing, you know, ideas of that time, which led to, you know, what we now call the new frame of work, which is remote working, revealing to us that work can actually be done anytime, anywhere, as long as you're connected and you have the facility to provide that. One of such, you know, is this platform we're using today, Zoom. Zoom became the order of the day at that time because anyone could organize, coordinate work mode meetings from every and any place around the globe. And then the next set of innovation started to pour out, and then we had the rise of the neobanks, you know, like Kuda, another great platform. And then, you know, to where we are getting to when we believe FinTech 3.0 started, the era of the super fintechs, you know, the fintechs that operate as fintechs and also provide enabling infrastructure for other fintechs to reach their last mile consumers, last mile customers, and the concept of payment infrastructure, you know, as a service, you know, the likes of eTransact, InterSwitch, providing and leading the drive into that era. And then, you know, most importantly, the launch of open banking, you know, guidelines by the central bank, which has now become a very, very, very critical platform for the next phase of growth we will experience in fintech, in the fintech revolution in this region. And let's look at some of the key drivers of the startup some of the key drivers of the growth in fintech we have recognized and seen over the last couple of years, largely driven mostly by, startups and also the scale up of fintech startups supported by active regulator support. So let's look at successful fintech startups. A lot of the opportunities, like I said, the interest of private equity, venture capital, capitalists, even some strategic investors, started to follow the trend in this sector with the fast-growing fintech and ever-evolving, ever-dynamic ecosystem. New and innovative payment solutions became a regular feature annually with different ideas, different hubs, different hotspots for engineers, for product developers, propping up in various corners in the country and the region, further attract, leading to the creation of new innovation, new ideas, further attracting, additional venture capital investments into the industry. And, which also created, a lot more awareness by the guys in the center, the regulators, which led to the active regulator involvement, the CBN, the SEC, some of which had been even discussed and disclosed in the last presentation, and a few others, had to get on their game to always be on top of, evolving payment trends and always engaging key stakeholders so that the right regulatory framework that will enable, the ever-evolving, ever-dynamic sector to thrive, appropriately. And then, this balance, the innovation, successful fintech startups, ideas, and the active role of regulator created the balance that led to further growth in capital inflow. The necessary structures were being put together, the necessary licenses that would drive, operating capability development within those sectors, started to come out. And, this triggered another round of influx in capital inflow. Fintech in Nigeria has particularly enjoyed and continues to enjoy, increased flow of investment. Despite the harsh macroeconomy indicators and era we're even facing right now, there's still fintech ideas and still good money, bankable, chasing bankable ideas and investments that will provide the required returns of the private equity investors and the hedge funds. Nigeria has recorded incremental number of investment deals. Everybody's calling somebody these days. They want to make a pitch. They're looking for strategic investors. They're looking for angel investors. They're looking for partnerships. And which will probably soon spur us into an era of consolidation to deal with all the fragmentation that happened over time in terms of the influx of the opportunities we have seen thus far. Now, let's take a look into, the growing adoption of digital payment channels and the investment in infrastructure improvements, and also, the mitigating fraud framework that has to come. Because with all this development and all, the emphasis on investment, innovation, convenience, DIYs, do it yourself, quick to market, doing things with utmost convenience, created several transaction activity in billions of value and, billions of volume. Obviously, this has also triggered, influx of cybercrime. People taking advantage of all the innovation and the possibilities, to hack into unsuspecting systems and defraud users, consumers, merchants of their hard-earned money, taking advantage of the various innovative solutions and perspectives that have been thrown into the marketplace. Recent events in the financial services industry, resulting from, CBN's latest cashless policy, and even the effect and the impact and the counter impact of COVID-19, have led to a significant surge in the adoption and utilization of digital payment channels, like I had suggested previously. And then, improved infrastructure as this increase in transaction activity has led to a key critical players in that industry to invest adequately, in elastic infrastructure, elastic capability that can deal with immediate surges in growth in transaction activity. And also payment adoption has followed the pace, of adoption of mobile and internet connectivity, and as a result, has been limited in regions where there is little or no mobile or internet connectivity. The deeper the internet penetration, and I believe the more expansive the adoption of fintech solutions, fintech products will be in each of the specific regions. And then, like I said, all of this progress created cyber fraud, which had to be mitigated. And this is a daily, ongoing, hourly reviews into how we can improve and improve on solutions that will have that mindset and that structure to prevent fraud vis-a-vis, the concepts of cyber fraud mitigation. As digital payment adoption rises, the threat of cyber fraud, has also been rising. This is, evident in the recent reports of fraud incidents in the news, however, within reasonable limits, and there are structures in place to mitigate them. Ever-changing, ever-evolving, ever-dynamic space here with respect to putting things in place to fight cybercrime. Now, despite this progress with all the key drivers that have led, to what I would call the promotion and revelation of the fintech and the super fintech era, there are payment white spaces yet to be fully harnessed across the industry. They are being looked into, and there are a lot of critical participants driving growth and driving innovation in each of these spaces. But I just want to spend some time looking at the trends we see, from our own perspective. Thrift savings is one of such. Long before, the internet and conventional banking services in Nigeria, thrift savings have always existed within close-knit communities built on trust and accountability. You have someone within the neighborhood who everybody trusts, who everybody respects, who everybody sees as, upward and coming, with a good reputation as a center point for managing and collecting the thrift savings framework within those ecosystems, cluster groups, like we like to call it. Despite the penetration of digital payments, a lot of bank customers who participate in this form of informal savings, still do so through peer-to-peer transfers, as there's not been, a reverberating, consistent solution that can sort of address, the opportunity with this. Yeah, there have been a few, mentions here and there of what certain solutions can do, but it's a white space. It's not a total blank space. It's a white space that has an opportunity for participation, opportunity for scale, opportunity for innovation, opportunity for investment, so that the required scale can be provided, required opportunities there can be explored, exploited, and we can even further digitize, this mode of savings. So this is one area that we believe will drive the future, of financial technology, as a growth area for this region. The next is, the buy now, pay later concept. As digital payment adoption deepens, we see a trend where microcredit facilities, can be tied and are also being tied to the purchase of goods and services, on the same payment rails. This will in turn continue to provide the much needed historical basis for even dispersing more credit for digitally active customers. These would thrive on a lot of data. The quality of data participants in this space have amassed over time would help, in their predictability analysis in terms of, assessing the suitability of any customer wishing to trigger this type of product or this type of service so that they can take advantage of it. It's not a new concept per se, but it's a concept that and a service, and that is it's out there. It's still in a wide space. We need to build solutions that can take advantage of the potential credit facilities that can drive the adoption of BNPLs, like we're seeing in more advanced market. Nigeria is still a largely cash driven economy. And as we continue to, evolve into some form of a credit-based economy, these are the type of solutions that, would thrive, that can scale, and that would need, the juice of a credit-based system to drive the adoption and growth in this, with this trend we're seeing. The next is, escrow service. This is something I personally worked on just to see how we can, bridge the gap of, merchants and, consumers buying goods, merchants selling goods in terms of, there's this common skit you see in the social media spaces today, what I ordered versus what I got, and a lot of times, because of the distribution system, distribution network, a lot of, investment and resources have been put into it. You find out that most consumers always have to settle with obtaining what they didn't really expect in terms of when they were trying to make an acquisition or make a purchase. Across almost, all forms of trade in Nigeria, trust remains a make or break factor. This is why e-commerce has historically, struggled. It's evolved and it's grown significantly, but I think the expansive possibilities, are geometrical in this region. And I think e-commerce has historically struggled in these markets to see the scale that can stand on, the population platform we have, and also to see growth that is commensurate to the cost of marketing, that has been invested so far. Escrow features, like I try to explain, allows customers the benefit of confirming the quality of goods and service has been delivered before guaranteeing payment to the merchant. Once this service has been successfully rendered, this can bridge that trust gap. And once you know that as an individual, as a consumer, you know that eventually you will not lose value for a solution, product, service that is not in line with what was promised. I think that builds the trust and can easily, quickly build more activity and more users, within that space. So this is an area to watch. There are a lot of ideas, moving around, flying around in terms of how to address some of this. And I believe, before the turn of next quarter, new solutions, will be hitting the market space, trying to address this opportunity. And the next, not the least, is peer-to-peer lending. This is another white space that it's quite active. You see a lot of peer-to-peer lending on an individual basis, but can we take a step back and think about how to build more collaboration and build a system that allows people that have excess funds, pretty much banking lending on a peer-to-peer basis, an infrastructure platform where I can go in, sign up, and then provide extra excess funds I don't need over the next 60 days to individuals that may need it. This is another form of informal banking, that has always existed long before conventional banking and represents an opportunity to unblock, digital payment adoption. Most peer-to-peer lending happens as funds transfer transactions. You know, you need money, send me back in 2 days. I'll give it to you at the end of the week. You know, that concept of urgent 2K, urgent 3K, urgent 4K, you know, that we've heard and overheard in this sector, pretty much as part of our culture over time. I need that urgent 2K. If there's a platform that sort of allows the urgent 2K to be easily recouped, I think we'll see several urgent 2Ks that can evolve into urgent 20Ks, but under a more structured, you know, and guaranteed recovery platform. You know, this is a huge potential. I've looked into this extensively. I've done some work here as well, because it has the capability to attract, you know, more users to utilize digital payment channels for transactions that could have, you know, otherwise, you know, been cash-based. What's the security and what's the evidence for a cash-based transaction? You know, it's usually based on the trust we talked about. And if trust is not there, trust is not there. And it's going to kill the scalability or the expansive growth potential of any solution that we try to put out there. And you know, for me, the most important aspect of everything we're doing now in terms of, you know, how we bring all our, you know, platform development, you know, evolution, dynamism that everybody has, you know, invested, you know, heavily in time, invested heavily in training, invested heavily in knowledge, invested heavily, you know, from your experience. I experienced, you know, in this sector, operating for over 20 years, you know, collective, you know, collaboration of, you know, big players, medium players, small players that have, you know, fantastic, you know, product ideas, bringing it all together so that we don't continue, you know, to reinvent the wheel. I see a lot of wheel reinvention in this sector. Everybody wants to own the same thing. Everybody wants to do their own, you know, but we can collaborate and, you know, just, you know, build expertise across the value chain. And, you know, create standards, operating standards, you know, across those value chain. You have to meet certain requirements before you can be a platform provider for the value chain, so that people that will normally go and build theirs because they have the resources and they have a dire need for an infrastructure, or will be able to rely on your services because you have met the standard. So we don't need to recreate and reinvent the wheel. You know, as I think if we get this right, this open, you know, API move, if we get it right, it becomes explosive. As more and more payment capabilities are developed and deployed into the market, you know, the industry has got to benefit. You know, as stakeholders are forced to innovate. However, too often new players are compelled, you know, like I mentioned, to develop existing capabilities due to our siloed way. You know, we like to operate. I want to own mine. You know, I want to control mine. I want to, you know, I'm not sure platform X will give me what I want. You know, but if platform X has been subjected, you know, to minimum operational standards by our association of fintechs and super fintech, and that is the only criteria for participating in that value chain, and we enforce it, I think we can rely on those systems. And then we can focus on our specific needs rather than building the infrastructure that our needs can, you know, evolve on and run on, you know. So these capabilities need to be looked at, you know, and the required relationship for building APIs can also be shared and consumed. You know, with the release of open banking guidelines by the CBN, you know, last year or a year and a half ago, there is a way for stakeholders to collaborate, you know, share ideas, share responsibility, share revenue, while focusing only on, you know, their, you know, specific unique selling propositions, because the infrastructure, the collective and collaborative infrastructure has been built that everyone, you know, everyone can run on. So for me, this is one of the more important, you know, trends we're seeing, and one of the more important aspects of growth and expansion we have to solve. you know, if FinTech 3.0 is going to achieve the robust objective we see and the potential we see in it, you know. So in rounding up, sorry to have taken too much of your time, you know, the future calls for us to act right away. We have to act and, you know, embrace open API. We have to. We need to spur innovation to take advantage of, you know, this payment white spaces that I have you know, explained and tried to explore from our own perspective. You know, things like the thrift savings, buy now, pay later, escrow, peer-to-peer lending, and, you know, the open API concept. It is going to take innovation from both regulators and operators to achieve this. We have to collaborate, guys. We have to collaborate. And, you know, regulators must be unified in defining the standards for fintechs to follow. Once the standards are there and are enforced, I think we can rely, you know, we can rely on those platform providers, knowing that what I need, what I want, as long as I've built to those standards already operate. If we enforce it, we will build the required trust in it. We will see the collaboration, and people will be able to depend on it. And then everybody focuses on that specific, you know, USP they need to create. And then, you know, we save a lot of money having to build my own again because I want to own it or because I don't trust that this platform provider can give me the basic requirements I need for me to thrive. Because a lot of times now, you know, solution providers want to focus on winning customers and retaining customers. I don't want to have to worry about, you know, the infrastructure of the platform because I've made the investment, I've done the training, and I expect it to always be available every time I need it. So let me focus on what actually brings revenue, my customers. Let me create ideas, new solutions that brings customers and keeps customers. And then, you know, most importantly, we must unify, you know, our national identification data sources to improve, you know, cybersecurity in payments. You know, there are several databases doing the same thing. You have BVN, you have NIN, you have SIM registration, you have driver's license, you have national ID card, you have international passport. Everybody trying to do the same thing. We have to unify this so that there's one API that checks everything. We built a solution recently for the military pensions for validation and verification. We just concluded the pilot work just to take some feedback and see what areas of improvement. You know, the biggest issue we have faced is with the identity side of it. You know, if one aspect of if one data source is not working, you have to go to the next one. You have to go to the next one, you have to go to the next one, you have to go to the next one. And then the naming convention across the various, you know, identity data sources are different, you know. My name is Olani Tolulokbe, Toluwalokbe, and then for, you know, Awoshope. You know, maybe that's what is on one database. The next database, as we mixed it, Awoshope, Olani. And, you know, you have to build some intelligence, logic, and some acceptance capability into your validation protocol so that, okay, you know, it's 95% okay. So you accept it, even though there's always that risk that it's a different person. So if we get the naming convention right and we unify all data sources, I think the reliance on all of these things will improve, you know, all the things we're trying to achieve, you know, as a sector, you know, and I think we'll be absolutely, you know, more successful to extracting the value identified in this next era of fintech evolution. You know, I remain yours truly, Chief Executive Officer of eTransact International, and you know, and a member of the fintech NGR and Fintech 1000 group. I hope I've been able to engage you adequately over the last 15 minutes in terms of talking about the FinTech 2024 era, the past, the present, and the future, and the specific areas we believe we need to collaborate and push so that this sector can explode and we can extract the maximum value we see. Thank you very much. Questions, comments?
Thank you very much. Thank you, Nee. Thank you so much, Mr. Nee, for the excellent presentation. Dr. Obrima, are we able to take question? This is
No,
quite...
sir. I think we just take the presentation from NFIU
Okay.
and the update on the FATF gray list issue.
Perfect. So that's Mr. Mohammed, right?
Yeah, Mr. GS.
Okay. Thank you, Mr. Chia. Please, you have the floor.
Thank you very much, the organizers, and thank you very much for the other presenters who have done justice to most of the issues that, because I've seen across the board, there is need for compliance, and everybody kept insisting that there is need for those players in the industry to make sure that they act and operate within the confines of the laws and the available regulations. So without wasting much of our time, as we all know, Nigerian Financial Intelligence Unit remain a central agency responsible for receiving reports from reporting entities. By reporting entities, we mean all deposit money banks, development banks, private mortgage institutions, fintech, payment service providers, all those players that are within the payment sector, and also designated non-financial businesses and professions, popularly known as the DNFBPs. We receive this report and disseminate it to law enforcement agencies. If during our analysis, we are able to find out that we have every reason to suspect there is either money laundering, terrorism financing, or any other predicate offense. As we speak, we have over 4,000 reporting entities sending report to the FIU. And we also have we are serving more than 47 law enforcement agencies, anti-corruption agencies, and other competent authorities. We have about 98.8 million currency transaction reports. In a transaction, you can have, in a report, you can have almost more than 500 transactions in a single report. So we have these currency transactions are based on the threshold, and we have suspicious activity reports. And we are connected to 174 financial intelligence units through the Egmont Secure Web. And at the moment, FIU has over 300 intelligence analysts working and analyzing data to generate intelligence. NFIU, the Secretariat of Interministerial Committee and Secretariat of the National Sanction Committee with respect to the AML-CFT. We have mandate to collaborate with law enforcement agencies, security agencies, even reporting entities, and self-regulatory organizations in any aspect of anti-money laundering, counter-financing of terrorism, and counter-proliferation financing. We have powers to stop transactions, monitor transactions, and so put surveillance on transactions, and we can request for or collect any information within feet. Now, we have been engaging with fintech after its inception. When NFI became autonomous in 2019, we received the management of fintech led by the president and chief operating officer and entourage, met with the NFI purposely to start up a collaboration. And since then, we have been working together. The fintech supported even the 2019 mutual evaluation process, the national risk assessment, residual risk assessment, and all that AML-CFT engagement. As we are all aware, the 2019 report identified a lot of deficiencies within the Nigerian AMS CFT regime. And the country, because of that deficiencies, was referred to the ICRG. And they gave us 84 recommended actions and 1 year post-observation so that we will work in our system and try to see how we can remedy those things and address those deficiencies. And we submitted our report in 2022. After the report was submitted, what we were also supposed to have done is the risk assessment. So we did a risk assessment which identified public corruption, drug trafficking, fraud, and terrorism financing as high-risk predicate offenses in Nigeria. By implication, the reporting entities, like all fintechs that has to do with transaction, are supposed to submit suspicious transactions that are in line, most especially that has to do with the suspicion of public corruption, suspicion of drug trafficking, suspicion of fraud, suspicion of terrorism financing, because these are considered as high-risk predicate offenses. So in February 2023, after the Financial Action Task Force adopted our post-observation report, they actually have recognized that the country has made significant progress addressing 69 recommended actions out of the 84. Remaining 15 recommended actions are very key, so they now added the country to the gray list to allow us time between now and May 2025 to address those issues that were identified and in the recommended actions. If we fail to do that, the country will be blacklisted. We have been working since that 2023 with reporting entities, including even the fintech as a self-regulatory organization. We have been engaging and trying to do, but as we speak, only 3 out of the 19 recommended actions, because the 15 recommended actions have some sub-items which make it in a total of 19. So only 3 out of those 19 are fully addressed. Nothing to be done. But we have 16 recommended actions that Financial Action Task Force have said all these 16 are partially addressed and must be fully addressed before, if not, the country will be blacklisted. Now, what happens if the country is blacklisted? There is, number one, issue that the country's sovereign risk rating will increase. There will be increase in foreign borrowing. There will be loss in foreign direct investment to the country. There will be loss of corresponding banking. And there will be reputational damage to the image of the country as one of the countries being in the blacklist. Only 3 countries at the moment are in that blacklist. Difficulty in obtaining financing from global bodies such as IMF and World Bank, etc. And FATF will call on other countries not to deal with Nigeria when it has to do with finance, because our financial system will be termed to be having a lot of risk. And that is why the FATF, the task force, added us to the blacklist. So this is why we need to work together and see how we can avoid the country to dripping into blacklist by addressing these things together. There are aspects that the reporting entities need to do. There are aspects that competent authorities need to do. Even this morning, we were at the National Counterterrorism Center. Last Friday, we were at the Drug Law Enforcement Agency, trying to see what everybody needs to do. Now, a bit of a progress. Despite that, the thing seems to be a bit gloomy. There are indications that we are making progress. And what is the progress? Number one, Nigeria has submitted 2 reports demonstrating the progress we've made in the country in the implementation of the 15 actions, which is read as 19. These reports resulted in the upgrade of 16 items to partly address and 3 items to be largely addressed, which I stated earlier. All items to be fully addressed by May 2025 or the country will be blacklisted. In our first progress report, it led to the upgrade. We have upgrade in 5 recommendations, recommendation 3, 7, 11, 19, and 20, which is out of the 40 recommendations. In the second recommended progress report, which we had earlier this year, which I have in last quarter of 2023, they apply upgrades in 8 recommendations. So we have moved up a step ahead in recommendation 1 about understanding him in the risk. Recommendation 2, 6, 8, 22, 24, 33, and 34. However, there is still their need for the relevant agencies and stakeholders to intensify effort in implementing the remaining actions required by the joint group. What do we expect from the fintech operators? Registration with Nigerian Financial Intelligence Unit for purpose of reporting. And for any time you will need to onboard your customer, you need to do know your customer, get all the relevant details. Drawing from the National Risk Assessment, there is need for every distinct to carry out risk assessment within your own system, within your own customers, within your own ecosystem, within your own entity, to know the risk of assessing the risk of your own customers, your product, your location, and all those stuff. So we also expect fintech operators and those who are in virtual asset provider platform should put in place mitigating measures that are commensurate with the risk you identify. Then the next is to make sure that there are policies, internal controls, and programs adequately to mitigate those risks. There is also need to apply customer due diligence. This can be automated in way of that you ensure that all your customers are actually who they are, and you also know those who are beneficial owners. Now, there is also need to keep all record with respect to KYC checks, CDD measures, and other mitigating factors, other mitigating measures in a form that is readily available on request by NFI law enforcement officers, and adequately detect suspicious transactions and activities and report them to the Nigerian Financial Intelligence Unit as stipulated by the law. So that is what we need. And as a next step, we want all fintech operators who have not registered with the FIU should do so as a first step to assess that you are ready to comply with the laws. All operators should start monitoring the transactions passing through their system for identification of suspicious transactions. Operators should start rendering suspicious transactions and suspicious activities. And also operators that have issues with NFIU registration can contact the NFIU for purpose of getting clarity for this. And these are just emails that you can use and telephone numbers that you can reach out to the FIU for purpose of this. So thank you very much.
Thank you, Mr. Gia. Dr. Jacob.
Thank you. Thank you, Mr. Gia. Really grateful for the insights and the communication that you shared. I think there is a question on the chat group from Ms. Bumi Lawson. She's asking, what protection exists for those reporting financing of terrorism so that their families do not become the next victim?
Thank you very much. What happened is whenever a reporting entity sends a suspicious transaction report, the is the responsibility of the FIU to protect the identity of even the reporting institution. What we do is that in our intelligence, we only make mention that one of our reporting entities submitted this. And you should also know that it is just one step. The next step is the investigator. Because even if after we have defined our intelligence, and our intelligence is not something that will be admitted in court, intelligence from the FIU is not admitted in court. So what the intelligence do is to provide a lead to the investigator to now make sure that he has a background information. So he will now go and do his thorough investigation, taking all the details. And now, if there is any need to prosecute that particular subject, he will now go to prosecuting. So with this, there is no way it will show that this is an action that is based on STR reported by a particular agency, a particular reporting entity. So there is adequate protection as far as STR reporting is. And you know that Nigerian Financial Intelligence Unit is, since 2018, is administrative type of FIU. Meaning the implication is that we are not, because when we are with EFCC, we are law enforcement type. But now that we are autonomous, we are now with the we are now administrative type, which means that we don't investigate and our cases cannot be taken to court. We are not supposed to go to court. So whatever the reporting entities give to us is just for us to prepare intelligence, which will serve as a suspicion and as a lead to any real reporting entity that any investigator that will deal with it. So completely the reporting entities are shielded from any exposure. Thank you.
Thank you so much, sir. Thank you. Thank you, Dr. Brima. I don't know if we want to progress. Are we able to take any more questions? I think we are fast.
Well, yeah, we succeeded our time. I think we just take your closing remarks.
Okay. Thank you very much. Just to specially appreciate everyone today on the meeting. First, to thank Dr. Agama for the presentation. We had very deep insight on the digital assets conversation. Then we had Mr. Nii. Nii took us through the landscape, fintech landscape on 2024. And our very able supporter, Malam Jia, took us through the parts on the NFIU update. Thank you for everyone who participated in this. I'm sure that we'll have more opportunities to interact. We should keep the forum alive, Dr. Brima, even outside the meeting, scheduled meeting times. It will be important for us to have an avenue to chat and communicate as required. There is quite a lot happening in the regulatory space. There's a lot happening in the emerging payment space. We should not be slow on any of them. We'll need all the stakeholders' collaboration as much as possible. But just to say on this note, thank you very much, and apologies that the time was overspent, but I think we've used it very well to the benefit of the overall ecosystem. Thank you very much and have a lovely afternoon.
Thank you, sir. Okay, thanks everyone for joining this session. We will share some of the presentations with you if you registered with your email. So wish you a nice day and see you at the next regulator session.
Idris, you have a okay, now I'll go. Sókè Obéjìdílé Omi Abdulkarim Ọdúnlà.